Well, good afternoon, traders. It's been an interesting session here in Asia. Equity markets aren't really doing a huge amount. We've got the Chinese market and the Japanese market fairly flat on the day. We've got the Hang Seng up over 1%, but remember that market was closed yesterday in the cash, and we're playing a bit of catch up coming through there. Our opening calls at the moment for US markets are a little bit constructive. We've got a bit of buying, and we're expecting the Wall Street cash, for example, to open up about 18 points higher at the moment. Little bit of buying. European markets look somewhat supported in this environment. We've got a little bit of downside playing through in the oil markets. I think people are probably largely priced in that OPEC were extending their production output cuts for another 9 months. Probably underwhelming to an extent. We haven't quite got that impetus at the moment to push us through that 60 handle in crude. Oil, if you look at gold as well, we're up about $6. Yeah, it's come down fairly sharply. Very, very frothy prices of late. People have taken those profits. G20 obviously causing a lot of people to unwind those G20 hedges. But people are starting to wade back into gold, and it's one thing we are watching. Considering as well that the US dollar is climbing. If you look at yesterday, if you look at the USDX, we can see one of the best days of the year, up about 0.8%. We are back testing that 2018 uptrend. You can see it testing the 200-day moving average as well. And as we go through European trade, at the 35 minutes past 8, we got John Williams speaking. He's the head of the New York Fed president there. And of course, you know, the big debate on the floor is whether we get a 25 or 50 basis point cut. The market's probably leaning closer towards 25 basis points now, but there's an element of pricing of 50 in there. So John Williams, one of the core members of the Federal Reserve, may give us some insights which changes that pricing mechanism a touch. Also keep an eye as we go into midnight Eastern Standard Time here in Australia, going into that sort of European US trade rollover. You've got that durable goods factory orders coming out of the US, and also the services ISM numbers. Now, the market shouldn't be overly sensitive to them. Of course, they've got the eyes on the prize, which is Friday's non-farm payrolls number. But, you know, we are keeping our eyes little bits of the jigsaw puzzle, which make us a bit more clues on what's going to happen with this 25, 50 basis point numbers. And I think given that the US economy is so heavily weighted towards the service sector, that ISM service number is an event risk. But, you know, we're not expecting huge volatility from there. Now, as we go into the Asian session today, we're going back to that space side of things. Of course, all eyes have been on what's happening in the RBA announcements. Now, it's interesting to see that we did see the 25 basis point cut. That was largely priced in, and there was about an 84% chance into swaps markets that was going to happen. But, you know, after about a 15, 20 point move lower in the Australian dollar, which I imagine you would expect to see, we saw a violent about turn. And actually, the Australian dollar now is the best performing currency in G10. Of course, there's a lot of traders out there scratching their heads. The RBA cutting rates, yet we're the best performing currency. It doesn't make a lot of sense. Well, of course, you've got to look at what was priced into the curve longer term. The market had already discounted an August cut. And I think, yeah, if you look at the statement, yeah, they've said that they probably will adjust monetary policy again. We've got to keep our eye on the inflation numbers. They come out on the 31st of July. Get a weak number there. Of course, they will cut in August, in that, my opinion. Also, we're keeping our eye on the labour market. We've got a labour market reading on the 18th of July. So, you know, those numbers could affect market pricing around that as well. But certainly the Australian dollar had a big reversal after we've seen that statement. A lot of that already priced in.